Let's take a quick look at Bitcoin's price action this morning. We see it's in mildly positive territory, but traders are staying out of Bitcoin despite a more risk-on attitude from broader markets. This according to CoinDesk, with waters deemed too shallow to support moves from so-called crypto whales. Bitcoin, the world's largest digital asset by market cap, remains the most liquid cryptocurrency and is preferred by large traders over other coins. Now, the overall crypto market, of course, still reeling from the fallout from FTX's collapse, along with its affiliate Alameda Research, no longer providing much of the liquidity that the market relied upon. Well, turning to another headline in the crypto space, Coinbase cuts back. The crypto exchange set to lay off 20% of its workforce in an attempt to weather the market downturn. Now, the cuts are set to affect about 950 employees. And our next guest is still sticking with its hold call on Coinbase. Joining us now, Trevor Williams, Jefferies payments and fintech senior analyst. So, as we've seen here, we've got these job cuts here, but you have a hold rating here and a price target of about $35 here. What is the optimism? What's driving this, as we've seen some downgrades lately for Coinbase as well?
Well, I think we tried to couch our call of yesterday in our initiation is kind of a near term versus a longer term potential story. In the near term, we're not saying anything new. I mean, this is a very difficult operating environment for Coinbase. Retail trading was already under significant pressure prior to the collapse of FTX. In the time since the collapse of FTX, average daily trading volumes are down about 40% from where they were in early November. And so, I mean, this is clearly a reactionary move to a worsening operating environment. And I think that there's a kind of a tacit admission that it's going to be a lower for longer type retail trading environment, which is kind of the key model driver for Coinbase. And so, I mean, we view the cuts as necessary. We were expecting an additional round of cuts to come sometime in 2023. So we're a bit surprised by the timing, but not at all the fact that they're going to need to react to what is clearly just going to be a softer trading environment for a prolonged period of time.
And in an interview, Coinbase CEO Brian Armstrong cited the unscrupulous actors, referring to, of course, Sam Bankman-Fried and FTX, and talking about the contagion here. Even though Coinbase wasn't obviously directly involved with what was happening with FTX, some of the trust that was lost here, obviously it's making retail investors particularly start to continue to withdraw from this point. How long does this contagion continue? When does this final shakeout settle in?
Well, I mean, the challenging part about investing in the space is that we don't know. And that's why we said investing in the crypto ecosystem writ large is very difficult to do in the near term. I mean, we do think companies like Coinbase, who are onshore, regulated, publicly traded, audited companies who have been at least more proactive in terms of regulatory compliance, we think Coinbase kind of has the chance to be a net share gainer if and when we do get back into another up market. We're not making the call that's going to be the case, but we're just saying that in an ecosystem that is kind of increasingly fraught with risk and a lack of consumer trust, I mean, Coinbase has a premium brand. They have a track record of compliance, of not gating client withdrawals. So they really are the good actor in the ecosystem. So they do stand to be a net beneficiary longer term if we do go back into another up market, which, I mean, that is too difficult of a call for us to try to make. And so that's why we stuck with a hold rating when we picked up coverage.
And as you sort of draw some comparisons with other exchanges, I know that you like also the strong balance sheet that Coinbase has. What do you think is going to be the difference maker for Coinbase versus some of these other exchanges that might be in trouble?
Yeah, I mean, I think you called out the most important piece, which is they've got $5 billion in cash, $3 billion in net cash. Clearly, post the OPEX reductions that we'll see come through, really starting in 1Q23 from the headcount cut. I mean, they're going to be moderating their cash burn, hopefully throughout 23. I mean, I wouldn't be surprised to see another round of OPEX reductions at some point next year if trading stays kind of at the 4Q run rate level. So, I mean, we do think they have the liquidity to weather a prolonged downturn. They are, I think, better positioned than others to be able to withstand what's going to become increased regulatory scrutiny. We'll see what sort of legislative action comes out of Congress in response to the FTX fallout. All of that makes for a continued challenging environment in the near term, but we think they are going to be better positioned to weather a longer downturn. I mean, we're not making a call that, things get all that much better in the intermediate term. We just think they have the liquidity, they at least have the infrastructure built internally from a compliance risk tax standpoint to be able to deal with increased regulatory scrutiny. And so, I mean, we do think that they are a long-term net share gainer as a result of all of that.
And do you think, given that we've seen the amount of retail trading volume declining as we've seen some of this trust sort of wither away, can you really have a good solid rebound for Coinbase if you also don't have sort of a rebound in what we're seeing in crypto tokens as well?
No, I mean, so goes retail trading, so goes Coinbase. And retail trading tends to contract more in down markets and do better in up markets. And we see that reflected in Coinbase's total market share, how they've lost share over the last 2 years as crypto prices have fallen. And so you really do need to see another up market. And when I say up market, I mean, you need to see crypto prices higher. We use Bitcoin as kind of the proxy for overall crypto prices, but you do need to see crypto prices recover for this stock to work. And we have no visibility into being able to make that call. And so that's why, again, we stayed with the rating that we did.
And I want to ask you about Binance. A lot of people wondering what's happening there. They've also seen sort of record withdrawals coming over the last 60 days, about $12 billion being withdrawn there. How much more contagion do you think will Binance and any issues there further affect other exchanges like Coinbase?
Well, look, I mean, we just go back to the fact that Coinbase, from a risk management standpoint, has been very well insulated from the collapse of FTX, from earlier issues this year tied to Voyager, Three Arrows, and Celsius. There was no ripple effects on the Coinbase business aside from just overall market activity. So we've seen their risk management capabilities kind of proven through down cycles already and through other, I'd say, kind of exogenous events in the ecosystem. So I've got full confidence that if there is more shakeout across the ecosystem, that Coinbase, aside from what it's going to mean for just trading volumes at the industry level, is going to be fairly well insulated.
And then looking forward, then, in terms of downside risks that you're keeping an eye on for Coinbase, what are your top risks that you're looking at?
Oh, well, I think it's just that if we stay in kind of a prolonged, subdued environment for retail trading. And I mean, the biggest risk that there is if crypto prices stay where they are or continue to fall. And if crypto prices fall, that's going to hurt their retail trading volume. And that means that the path for them to get back to profitability, to get to free cash flow generation, is going to be that much more challenging for them. And so, I mean, you're really taking crypto price risk by owning the stock here.
Indeed. Well, Trevor Williams there, thank you so much. Jefferies Payments and Fintech Senior Analyst, thank you for joining me this morning.